Hello, I am glad that you can join me here today. On this video, we're going to talk about the difference between factoring and purchase order financing. Matter of fact, I'm going to cover 3 things that make these type of financing completely different. Again, if you don't know who I am, my name is Brian Otieno. I am the business credit and personal credit funding expert. I help entrepreneurs and business owners just like yourself either start, grow, or expand their business. You definitely want to check out pcgcreditfunding.com if you want to get in touch with us. We have many solutions for you if you're trying to get funding for your business. But without further ado, let's go ahead and get started on today's topic. So again, on today's topic, we're going to cover the difference between factoring and purchase order financing. And matter of fact, I'm going to emphasize on 3 key things that make these 2 types of financing completely different. Now, I know there's tons of Google searches on these. Sometimes people confuse what they are. Sometimes people think that they're the same thing. Let's start right there. Let's explain the difference between factoring and purchase order financing. So number 1, let's talk about purchase order financing. Purchase order financing is where you actually can get financing based on a specific purchase order. In real life scenario, let's just say, for example, you're a candle maker or you make some type of tangible good, t-shirts, shirts, whatever it is, whatever product that you sell, cell phones, cameras like the one I'm looking at right now, whatever tangible product that you sell, let's just say you receive a large order from a store or distributor or whatever it is, Walmart, let's just say, for example, or Target wants 1 million copies or 1 million orders or whatever that you sell. Now, in order for Walmart to pay, you actually have to satisfy the order first. Now, in order to satisfy the order, you need money. You need to have some labor, and you need to be able to pay your labor. So what you can do if you don't have the money, you can approach a purchase order financing company, and they can advance you the funds so you can be able to manufacture the product and actually deliver them to your customer. And then once your customer receives the order, because they're only going to pay once they receive their product, of course. Once they receive, they can pay back the purchase order financing lender, and you basically have the benefit of constantly being able to have access to funding, so your business is not limited or waiting on this one client before you can get your money that you're invested in, so you can continue going on with your business. So you're not constantly being short on funds and so forth and so on. That is what purchase order financing is. That is what it's designed for, and that's what it does. Now, on the other hand, we have factoring. It's very similar to purchase order financing, but not really, okay? The major difference is factoring is used for service already rendered. Let me give you as an example. Let's just say you're a construction company or you're a service-based industry that you offer specific service. Generally with construction company, of course, you're not gonna get paid until the job is done, the building is built, the road is done, or the swimming pool, whatever it is that you're building, okay? So once you get that done, generally, sometimes, depending on the industry or depending on your client, let's say it's the government or it's a municipality, they usually take time before they pay you. Sometimes that's 30 days, 60 days, 90 days, or even more, just depending on what the scenario is. So now you as a business owner, you're left out there pretty much holding the bag. You know, you don't have any money. You still have to pay your workers, you still have to pay the material, you still have to pay all these other things in order for you to actually construct or do whatever that needs to be done. What you can do is you can actually approach a factoring company, and that factoring company, what they will be able to do is actually advance you a portion of that order depending on a few different factors, you know, maybe the type of company that you're invoicing, that company's actual business credit history, how well they pay the invoices, so you can be able to now get the funds and keep the business going, and you don't have to worry about waiting, 30, 60, 90 days for you to get paid. That's the key difference. Purchase order financing, you get an order, you need money to satisfy the order, you go ahead and get the money advanced to you so you can satisfy the order. Factoring, you have a contract that you've already rendered the service, you're waiting to get paid, you go ahead and approach a factoring company, so you don't have to wait, you can get the funds advanced to you so you can keep kind of the business going. That's the key difference between the 2. You need to be able to understand the difference between the 2. So now let's quickly talk about, again, the 3 key differences. What makes these 2 things completely different, since now you clearly understand the difference between the 2 and how they work. So let's talk about rates and terms. Now, what you have to understand is this is not a loan. Unlike a bank loan, factoring companies or purchase order financing do not use what is called an interest rate, okay? What they generally do is use what is called a factor rate, because what we're dealing with here is very short-term financing. Now, when you're talking about purchase order financing is generally between 4 to 10% or more. It just depends on risk. While you have factoring, which tends to be a little bit cheaper, we're talking about 1 to 4% or more depending on risk. When you're comparing the two, you have factoring tends to be a little bit much cheaper than you have purchase order financing. So that's number one key difference between the two. But again, the benefits are there. Yes, you're going to pay. Sometimes you get to pay a little bit much higher than what you would if you were to get a regular bank loan. But you don't have to go through the process of getting a bank loan. You don't have to have a minimum credit score, bank statements, tax returns. The underwriter is not going to really scrutinize you and your business. They're mainly going to be focusing on the business that you're doing business with, which is one of the beautiful things about this. There's no minimum credit score requirement with either one of these loan options. There's no minimum revenue requirements. There is profit margin requirements, okay? With purchase order financing, lenders tend to care as to how much profit margin you have. You have to have a certain profit margin in order for you to actually qualify, since they're waiting to get paid based on the purchase orders that you receive. So that's one of the differences. There's no time in business, as I said. So again, it allows, startup businesses, established business, or even business that have credit issues, cash flow issues, or even bank statement issues, so they can have consistent access to capital so they can continue growing and establishing their business. So that's one of the key differences, is the cost of financing and how much you're paying back the financing. And we're not dealing with, key word here, you're not dealing with interest rate. You're more so dealing with what is called a factor rate, and it's usually charged on a monthly basis. So this is short-term financing. This is not the type of financing that you want to have for years, like 5 years or so. Generally, factoring are 1, 2 months, maybe even 3 months. That's about it. I have seen, just depending on the business and depending on the loan, they can be a little bit higher than that. But that's one of the key differences, is terms and interest rate. Now let's quickly talk about restrictions on the use of funds. One thing is, when you're talking about purchase order financing, you are automatically restricted to only use the funds for that specific order. You have to use the funds to satisfy that specific order. You cannot use the money to pay rent, to pay, your car payment, or maybe a utility bill, or whatever it is. The funds must be used, since you're borrowing the money in order to satisfy that specific order. The funds can only be used to pay laborers. The funds can only be used to purchase material to satisfy specifically the order and the order alone. Unlike when you're talking about a factoring. With factoring, there's absolutely no restrictions on funds. You can use the funds for whatever you see fit, since with factoring, you actually factoring an invoice that you're expecting. The service is already rendered, basically. So this is money your business is owed. So absolutely, the lender cannot place and does not place any restrictions on how you can use the funds. You can use the funds as you see please. So that's the thing as far as restriction of funds. With purchase order financing, there are restrictions. You are restricted on how you can use the funds. With factoring, there is no restrictions at all on how you can use the funds. Now, the next thing is, with purchase order financing, they do not allow service-based industries, okay? So if you're a service-based industry, if you do not produce a tangible product, something that can be touched with your hands, you do not qualify for purchase order financing, unfortunately. You only qualify for factoring. Factoring does allow service-based industry. Once the service has been rendered and the client owes you, the client is pleased with the service, okay? That's another thing. With all of these, since it relies upon the client, your client paying that invoice, the lender will double check. They will confirm with factoring. Before you get paid, they will confirm with the actual client. Did they receive the service? Did they have any questions? Did they have any concerns about the service before you get advanced your funds? If there's any issues, that is also going to be something that the underwriter is going to be looking at. With purchase order financing, the same thing. But the lender will make sure they contact your client, make sure that the products were delivered on time. There is no issues on the products that they were delivered. They make sure that everything is okay, because again, they're on the hook once they extend those funds to you, okay? So that's one of the things, one of the key things that you want to put out there is, number one, There is restrictions on funds on how you can use purchase order financing. They can only be used to basically manufacture and deliver the product that we're talking about. With factoring, there is no restrictions on funds. Number two, with purchase order financing, service-based industries do not qualify for purchase order financing, but with factoring, service-based industries do absolutely qualify for factoring. So that's the key difference right there. So hopefully you found some value in this video. We've talked about the difference between purchase order financing and factoring. We've talked about the difference between their rate and terms. We've talked briefly about the restrictions on the use of funds. So hopefully by now you can understand the difference between these two and kind of the ins and outs and who qualifies and who doesn't qualify. Again, I really do appreciate you. If you want to get a little bit more information about what we do, and if you need assistance yourself with either purchase order financing or factoring, we're partnered up with every single lender out there that offers these products. We've been in business for years, helping thousands and thousands of clients just like yourself start, grow, even expand their business. So definitely get in touch with us. You want to check out PCGcreditfunding.com. I'm giving out a free article there that you can learn everything you need to know about business credit. One of the biggest things that I focus on, and I emphasize this with pretty much every client that I deal with, is the importance of establishing business credit. So we help small business owners just like yourself build business credit, establish business credit, so you can have that additional borrowing power, okay? It takes money to make money, okay? That formula will never change anytime soon. You need to have money in order to make money. And what better way of, instead of using your money, is using other people's money, using the bank's money in order to fund your business, okay? So we help people establish business credit so you can no longer depend on your personal credit to finance your business. One of the trends that I've seen, and I'm trying to change that trend, is small business owners, entrepreneurs utilizing their own personal credit in order to finance their business, not knowing there's such a thing out there as business credit, where you can build business credit, where you can separate your personal credit from your business credit. We have a nice extensive course that covers this, where we can walk you through starting your business, starting to build, getting your EIN number, setting up a merchant account, setting up your business correctly, making sure that you meet the compliance, okay? There's so many business owners that I've seen do this, and they do this the wrong way, okay? So we have a program that helps you kind of do that. PCGcreditfunding.com if you want to get a little bit more information about that. And if you don't know, I'm still giving out a free copy of my book. There's going to be a link in the description, 3 Paths of Lending, where I cover all these different funding options so you can know exactly what is available for you as a business owner. So anyway, if you want to get a free copy of my book, there's going to be a link in the description. And if you also want to get in touch with us, there is going to be a link in the description as well. Again, like always, I do appreciate your time. If you have any specific topics that you would like for me to cover, do drop a comment and right below. Let us know exactly what you want us to cover or what you want us to talk about. As always, I appreciate your time, and I'll see you in the next video.